I'm Greg Hunter. Welcome to USAWatchdog.com. With us, our next guest comes from the European continent. He vaults gold on two continents for very wealthy people. And I want to read, before I introduce you to him, I want to read some of the things that he has said here on USA Watchdog over the past couple of years, okay? Just a couple of things that he has said. One of the things that he has said is, and this is back in September, financial system disappearing into black hole. This is right when, at the end of September, when they went full on crazy, taking over the repo market and $60 billion a month at the Federal Reserve. Another one, trend is clear, rapid decline of world economy. This is Egon von Greyerz, of course, I'm talking about. And this is really stuck with me. Risk exponential and unmeasurable. Exponential and unmeasurable. I've already given it away. It is Egon von Greyerz at Matterhorn Asset Management, also goldswitzerland.com. Egon von Greyerz, thank you for joining us today on USAWatchdog.com.
Greg, very good to be with you. These are unprecedented times.
Absolutely. You've been spot on with the risk. You said about this one really stuck with me. And you said risk exponential and unmeasurable. And you said you add everything up, state, local, sovereign, everybody's debt, all the derivatives, all the corporate bonds, everything up. You add up all the debt, the money, you add the whole ball of junk up, and it's 2 quadrillion. Yeah. He says, and you just don't know what the risks are. It's unknowable. I guess we're finding out what the risks are, aren't we?
We certainly are, Greg, and the system is bankrupt. You know, bankrupt is a very old Italian word. It came from banco rotto or bancarotta, which means a broken bench, because the banking system in the mid-1500s was done on a bench. And when the banker couldn't pay his obligations anymore, they broke his bench. So the system is broken. It's bankrupt. It's broken. And, you know, this has been going on. This didn't start now with the coronavirus. It didn't start in September and August, when all the central banks were saying we will do everything we can. The ECB, the Fed started with the repos, etc. Greg, this started a long time ago. You know, the system was broken at the beginning of this century. And the 2007-9 crisis was the first signal we got that now the world is realizing that the financial system isn't functioning. Now, they threw 25 trillion at it in financing and in guarantees, etc. But I always said that 2007-9 was a rehearsal. Now we are approaching the real thing, and the real thing is, sadly, as I read economic history, economic cycles, this is the end probably of at least a 200 to 300 year cycle. So we are going to see some extremely difficult times. The coronavirus, which is a horrible catalyst, but it's all it is a catalyst. That is not the reason for the problem. The reason for the problems is a broken financial system, and that has been just getting, you can't get more broken than it is now, but it's gradually got more broken. And now we are starting the final stage of the end of this financial system that, say, started with the Fed in 1913. It's not going to go down in one day. We're going to see ups and downs. We're going to stock markets, having corrections up, and everybody will be euphoric again. But sadly, in the next few years, whatever it will take, 3 years, 5 years, we are going to see a massive decline in the world economy and in the financial system. I would be surprised if it survives. Certainly not in its present form.
They're talking on television. I've been watching I don't get any information from whatever. I'm just watching how they're covering this. So I get very little information from them unless somebody blurts something out, like the former Fed president, Richard Fisher, in 2016 said, we injected the system with cocaine and heroin. And everybody went, right? Richard Fisher, former Dallas Fed president. Of course, he quit shortly after that. They're talking about a V-shaped recovery, buy and hold for the long term. Oh, it might be a U-shaped recovery. Are we getting a V-shaped or U-shaped recovery in this, and back to where we were beyond and party on, Wayne?
How can we have a recovery with, as you said, a debt and obligation situation, including derivatives, which is 2 trillion? And what is every now central bank doing? Because they are doing the only thing they can do. Lowering interest rate to zero negatives will have no effect, will help nobody, and then throwing unlimited amounts of money at the system. But it's not going to help. The system is bankrupt. And if you add more worthless money to a bankrupt system, or as I say often, you cannot solve a problem with the same means that created it. So you can't solve a debt problem with more debt. But that's all they're going to do. But that debt, the market will soon realize. It will be euphoria maybe for a few days, and stock market will go up for a few days or for a few weeks, whatever, and then it will crash again. Sadly, this time they are not going to solve it. The world is now bankrupt, and we are going to see. You just take the dollar liquidity problem with all the dollars outside of the U.S. that are being lent to companies and non-banking institutions. That's a 12 trillion bubble, and that is now under enormous pressure. And they have to throw, well, they will eventually throw certainly the whole amount, in my view, the 12 trillion. But behind that is all derivatives also, and the derivative market only functions when people are buying derivatives. When people want to get out of derivatives, there'll be no liquidity. So it was 1.5 quadrillion. I think that we don't know the real figure because the BIS are not telling us. But I think the derivatives is probably a lot more now, and I'm sure that the Fed and everybody else are creating derivatives non-stop now with all these forex swaps, etc., dollar swaps to help the financing of foreign banks and of US banks, etc. So we are going to see the system totally flooded with money, and that eventually, as I've talked about for years, that we will see hyperinflation. There's no question about it.
Could in the meantime, with all this crashing stuff, and people get the idea that they want to go to their their bank and get their money, could we see the banks restrict actual physical cash and have tell people, sorry, we can't. I know you have your money, but we can't give it to you. I mean, Jim Rickards brought up this a long time ago. Back in 2008, 2009, everybody cashed out stocks and put the money into a money market, and then they sucked the money out of the system. Now they put money into this money market, after they sell their stocks, and yeah, they can halt redemptions. Could the bankers halt redemption of your money? Tell you?
Absolutely. They will do. They will do. And from what I hear is already starting in money market funds, in property funds, etc. And of course.
So wait a minute. So it's already started. They've already started withholding people's money.
Yeah, they have. But what we see here in Europe, in many, and you're seeing it in the US also, and that's the same phenomenon. You're seeing food shops with empty shelves. People are panicking. So that is the first reaction to the coronavirus, of course. But then at some point they haven't realized that. But the big problem is in financial markets, is in a system which has no liquidity, no money, and needs to print more and more. So people at some point will realize that there is no money, and you will have the same. People will be queuing outside of banks, or they'll go to their ATM machines, etc., to get money. And of course, they have to reduce them. But now the wonderful thing is, of course, in most countries, there's no cash anywhere, so it's easy for them to shut off the system now. And there will absolutely be shortages of cash for people, because otherwise you will have bank runs. I mean, I don't want to spread don't want to be sensational and spread these rumors, but that's all. My whole life and my business life and my investment life, I've always been looking at risk, and this is a risk that is reality today, that there will not be enough cash available for people.
Deutsche Bank. It's been I've been keying on Deutsche Bank for a long time. Well, ever since the International Monetary Fund called them the systemically most dangerous bank in the world. So that kind of got my attention. And so it was $120 a share back in 2007. It was over $100. I think it was around 120 in 2007. Now it's $550 or $560. Charles Denner said that they got it up in the last month or so, up to $11, and now it's been cut in half. Now it's $550 in that neighborhood. Deutsche Bank. They keep saying they won't let that go under. They let it go from 120 to 5. I mean, who is they in behind the curtain? If Deutsche Bank goes under, are these 2 quadrillion in debt and derivatives gonna fold under like a giant tsunami, like the beach in a giant tsunami?
Greg, Deutsche Bank is bankrupt. They have, in round figures, 50 trillion outstanding in derivatives. Commerzbank is also bankrupt and not far behind. But remember that JP Morgan also has almost 50 trillion in derivatives. So we're back to where we started. The whole system is bankrupt. Of course, Deutsche won't survive. Now, Deutsche is part of the German establishment, so they're not going to let Deutsche go first if they can stop it. So they will flood the market with unlimited amounts of cash between the Fed and the ECB, and then eventually, of course, eventually. Sorry, I'm going to drink. So they'll flood the markets, but Deutsche will not be the first bank that goes. They can't afford that. So they will do everything to save it short term, but it might last for 6 months or a year or so, but thereafter they will still go bust.
Haven't they already been doing that? I mean, everybody's been trying to figure out in the repo market. Everybody's been trying to figure out that what broke. Is it Boeing? Boeing needs $60 billion. They got the 737's never going to fly. That's a piece of junk. First plane ever. I was talking to a machinist last night about Boeing, who made parts for this jet. Now he's retired. He said it was the first. It was all done by AI. And anytime you had a problem, something would work in virtual reality. But when we started trying to make the part, Precision Builder, this guy was a precision part maker, and he said it wouldn't work. He says the plane's full of it. It's a piece of junk, but they need $60 billion, Boeing. But a lot of people have been asking what broke, and a lot of people think it is either Commerce or Deutsche Bank or some big banks in big trouble. Could be J.P. Morgan. I mean, after all, and I don't wish this on anybody, but Jamie Dimon had a huge heart attack right after he said, "I'm going to remove the stigma of going to the discount window." Remember that? Just recently, I'm going to remove the stigma going to the discount window. Like, I'm just going to go there and get some cash. It's okay. Then he has a, quote, heart attack. I hope he didn't, and I hope he's okay. I'm not wishing any bad things on him, but haven't they been trying to prop up the system in some way since at least September with this crazy $60 billion? You were talking last year that the ECB was into $20 billion. We got at least $80 over billion dollars. I'm going on too long, but haven't they been propping this thing up since September when they took over the repo market? Didn't something break back then?
Absolutely, Greg. I wrote an article it probably was September when after the ECB first said that we will do everything we can to save the system, and then the Fed started with their repos, and I said I compare this period now to August 1971 when Nixon closed the gold window, because I saw at that point that the central banks were panicking, and I saw that this will be as important to the world and as bad for the world as what Nixon did in 71. Now the systems survived for almost 50 years after Nixon did that, but that's really what started to destroy the whole financial system. Therefore, I thought that was a momentous time, what happened then in August, September, when the central bank was saying this. And of course, they said it because the banking system was broken already then. What we know, we don't know. Is it just a general funding shortage everywhere throughout the system, or were there specific problems in Deutsche or JP Morgan with their massive derivative position? It could have been both. Nevertheless, that's to me, that was the signal. Now it's starting. And now it's,
so you came on in the 20 you came on in the hold on, let me get this right because I want to give you credit where credit is due. And this is why you came on my air here and said back in hold on. Financial system disappearing into a black hole. You said that. That was your quote. And this is right about this. It said the central bankers are panicking. They don't know what to do anymore. They're just starting to print money with the euro on a daily basis. Europe is starting QE again with $20 billion a month. This was at the 25th of September. We had this problem. The system was coming apart at the seams. last year.
Yeah.
And now
Absolutely.
and then you were saying, hey, this thing's bad. The central banks are panicking. Of course, nobody reported it that way. You got new all-time high all the way up until I think February of 2020. And anybody that warned about anything when we were getting all these new all-time highs, was looked at like some nut, which nutty no more.
Yeah. Now, this is the problem. Bearers of bad news are always nutty until they're right, and then they're hated because they're right. So you can never win. But, if we go back a bit, Greg, that, I started worrying about the world at the beginning of this century and about the risks in the world. So this is what brought us into buying physical gold and storing it outside the banking system. We did that for ourselves and the friends that we advised. And not until a few years later did we open it up for others. So we created a system because we were so worried. And of course, when we bought gold, it was $300. And so we were early, but we're not early from the point of view of the gold price. We were early because the crisis only started in 2006-07 then. But nevertheless, when you see risk, exponential risk, which we have been seeing and gradually growing, you have no idea when it's going to happen. So that's why, as we read the markets, you have to protect yourself. And what is absolutely unreal that they managed to maintain totally false markets and no real markets with no price discovery certainly since 2009. By just flooding the market with so much money. Greg, we haven't got any real markets. We haven't got any real prices. It's all fake. It's all fake because it's all supported by fake money. And the world wanted to believe it. And they have managed to survive for 10 years or 11 years since 2009. But sadly, this is now the beginning of the end of this financial system. I'm absolutely convinced. I don't like to be a prophet of gloom and doom. I'm not a pessimist at all. I enjoy life. But when you see risk, you actually got to do something about it. I said in an article once, I've been standing on a soapbox for 20 years trying to help a few people to preserve their wealth. But of course, most people don't want to listen because most people want to make money in the casino. And the casino has been the financial markets and the paper markets and the stock markets. And I'm sure that there will still be now a lot of dip buying. And when we get the first correction of this massive 30% fall that we've seen in a few days or a couple of weeks and 40% in the Russell 2000, when we see the first correction, people are going to be euphoric and buy into that, and then the next shock comes, and then the next shock. And that's what we are going to see in the next few years. Risk is unprecedented. There is no solution to this. So don't believe that the world's going to be helped by printing of worthless money that has zero effect on global wealth.
I did some phone calling about the price of silver is like 11, something 11, 12 range, and call up a couple of shops that I know, and call one that has, so we got nationwide connections. Just nobody's selling their silver for $12 plus $3 commission. Nobody's selling their silver for that. Okay, it's 20 something, 22, 25. The going rate's about 25. One guy told me this just a couple of days ago, and so so the price with COMEX, CRIMEX, LBMA, that's a fake price. Gold's the same way. It says, they're saying it's 14 and change, but we can't get it for less than 16 and something. It's the prices are diverging from the paper market. The physical market is saying something totally different from the massive fraudulent. I don't know what we even pay here in America the CFTC for. I mean, I guess they're watching porn like they did during the Madoff days. Literally, it was reported that the SEC some of the people in the SEC were watching porn, and not a single person was fired over the Madoff thing. Not a single person. So I don't know how we even pay those agencies. But anyway, you said something really important, that people wanted to believe the fraud, the fake. People want to believe in the fraud.
Absolutely. Yeah, so it's because we've had a system now that gradually for 100 years become false in all aspects of life, not just financial, but also, there are no real values anymore, ethical values, moral values. Family has disappeared as a kernel of society. But let's come back to the metals, Greg, because you're absolutely right. just think about the size of the precious metals market, and that tells you something about all the manipulation. Remember that there is about 165 billion worth of gold produced every year, dollars, from the mines. 165 billion per year produced from the gold mines. The daily turnover of the LBMA and the bullion banks in gold, in the futures and paper gold, is 280 billion gross. So you're talking about daily turnover of 280 billion against annual production of 165 billion. Then you must understand there's something wrong with that system. And then when Bill Holter says, for example, talks about this exchange for physical that's sent to Europe, I am convinced that all they're doing is juggling all the positions on a daily basis in order for the system not to collapse. Because 280 billion a day, that's twice the S&P volume, and the gold market is minuscule compared to the S&P. So you can tell that there is something that isn't right something that is totally wrong with as we know, with precious metals, and that at some point is going to just explode. And I don't think we're far away from. So physical demand, you had reported from all dealers, all people who deal in retail gold and silver, especially silver, they're finding no stock now, and a lot of them here in Europe.
And if you can find it, the commission is 100%, roughly.
Yeah.
And then gold, the commission's $150, $200. I don't know. You can still find gold, but they're not selling it for what they're not selling it for that.
Even gold, a lot of the dealers here run out. Now we are fortunate because we are at we are bigger in this market, so therefore we have a direct access to the refiners and good relationships with them. So we are finding gold still, but it's getting tighter. It's getting a lot tighter. So so you have here a market where the real market has unprecedented demand now. And there will be, there are already shortages, and there will be more shortages. And then you have a paper market that is pushing the price down on a daily basis, and pushed it down 10 days ago, whatever, $100 in an hour or so. It's totally unreal, and it's going to fail. We don't know when. I think actually even, because fundamentally, we know that gold and silver will go up dramatically, but we don't know when fundamentally. Technically, it looks like this correction here now is finishing. So I don't think we're that far from the next leg up in the metals. But it's a criminal market. And we know that, and you talk to Bill Murphy, you talk to many others, and you know how much they've tried, Garta, etc., to actually attack this market and find out what's really happening. But of course, they're closing all the doors. They're never going to tell you the truth about this, because this is from the very highest level of governments, BIS, etc., which gold is being held down, of course, because gold going up dramatically is a sign of the system not functioning, and that's what they want to avoid at any price. Plus, I think all of these people, a lot of them are short all the time. They have, and they want to push the market down to buy cheaper. But this, don't believe that the gold price is the real price of gold, and the same with silver. It's nothing to do with it. It's just a manipulated, fake figure, and I think people should not measure. Also remember that it's actually, if you look at gold, Greg, in almost every currency except for the dollar, gold is now at the highs or very near the highs, much higher than in 2011. You take the pound, or you take the euro, or you take the Canadian dollar, or the Australian dollar, or the Japanese yen, they're all above the 2011 peaks. So the whole world is measuring gold in the wrong currency, but it's just because we have a technical shortage of dollars, and there is a high demand for dollars, so therefore the price of gold in dollars is low. But so therefore people shouldn't measure their gold in dollars. or in any currency. Just measure it in ounces or grams or kilos, because that's what you own and that's the real value. Or measuring it in fake paper money makes no sense whatsoever. Just think about that you own a weight of gold or some weight of silver or ounces or kilos, whatever, and that's what you should look at, because that's the real value. And it's going to have, if you measure it in this funny money that we have around the world, at some point it's going to be, figures will be ridiculous, because of course gold in as paper money will be totally debased and worthless. Gold measure in paper money will go up to levels that nobody will believe. But therefore, don't measure it in paper money. Just look at it, how much gold or how much silver you have in weight.
When are they going to? How close are we to this criminal enterprise of pricing gold and silver? How close are we to this ending?
I think, Greg, it would be linked to the failure of the financial system. But I think technically it looks like they're going to go up now anyway. But at some point they will.
Say that again. Technically, what they're going to do? What?
Technically, it looks like gold and silver will soon start the next leg up.
Okay.
But if we will see very high prices measured in paper money in the short term, I don't know. In the long term, we know with the debate, what's happening now. Every single government in the world is printing more and more money. And you have one rescue package after the other, and that's just the beginning. So, anybody who has a little bit of intelligence will know that central banks are now your best friend if you want to own or own precious metals, because they're going to do everything they can to debase the currencies by this printing that they have started. And so they have managed to hold the metals down artificially for some time, but they're going to lose that battle, and that's why I think we will see very soon already a revaluation of the metals. But eventually they will reach prices that measured in paper money that no one will believe. And I don't like mentioning sensational figures. When we started with gold in 2002, I said, in those days already, in real terms, I think gold will reach at least 10,000 in real terms, not in hyperinflationary terms. And I stand by that figure in funny money.
In 2002 buying power. In other words, we go back in the Wayback Machine and say, what could I buy in 2002? And you think gold will equal 10,000 of that buying power?
I think, absolutely.
Wow.
I think. Because you remember, so you have a combination of a totally false market, and therefore a totally false price, which will one day be rectified. And then you haven't got enough gold in the world. There's all the gold. Remember, so there's mine production is about 3,300 tons today. That is, and that we have reached peak gold. So we're not going to get more gold. And all of that year after year is being absorbed, Greg. That's at 3,300 tons per year. Now, we are seeing now, we are seeing people want to buy every day from us, and these are bigger buyers. So there are, the gold buying is starting now in earnest, not just the retail one, but also on the bigger level. Institutions haven't started yet, but big money and big wealth are doing it, and therefore, and there won't be enough gold. Nobody's going to sell the gold. So therefore, in normal markets, there is just enough gold. In these markets that are coming, there will be physical shortages, and this has pushed the price up also substantially. And then you have, as I said, when the paper market fails, then of course gold is going to jump by massive amounts.
Something else you said.
Excuse me. I don't want to sound sensational. This is just a logical evolution of a manipulated market with a big shortage in physical gold and a massive outstanding paper position that can never be settled in physical.
Something else that stuck with me. Some of the quotes that you've said just stuck with me, and I find myself telling my friends this stuff. Egon von Greyerz, who vaults gold on 2 continents, who runs Matterhorn Asset Management, Matterhorn Asset Capital, Asset Management, Matterhorn Asset Management, right? Okay,
correct.
Got it. Sorry. And I said, he's got a couple of decades in banking too, and insurance. So he didn't just pop up one day and say, let's vault gold. There's a reason why he's doing it. And he says, I asked him, I said, what do you think about the price of gold being down or up? Or he says, listen, the people I deal with, they don't get upset when it went to 1045, and they didn't get excited when it went to 1900. Wait for it. And then you said, we all know how this ends. We all know how this ends. And now we're looking at what you were talking about. This is the end.
Yeah,
Trying to run around if you got $1 billion and I need 5 tons of gold. Yeah, so does everybody else. Right?
Yeah, Greg, I always said to people that, first of all, our clients, as you say, they never phone or contact us when gold goes down, because they're not holding it to make short-term money. They're holding it as protection and as insurance. But I always told people, though, that don't wish for the price to go up, because the day it does, the world is going to look very different. So enjoy life the way it is today, because when gold goes up, as we know it will do, we will have real problems in the world, sadly.
And your folks are doing. People have told me that they've got 20% or 5%. They're worried about investing in gold. They're worried about the price going down. I guess that's what the guys crashing the market want you to worry about. But you're just saying, well, the silver market, you can't buy it now. So if little people wanted to buy silver, poof, buy. They're out of Eagles at the Mint. The Mint ran out. And that's been a while since the Mint just flat ran out of Eagles. And now they're going to retool and all that for the 2021 coins, but still they ran out. So, but you're just saying that this is how this ends. I mean, you need some sort of physical asset in your portfolio that you own completely under your direct control, no matter what it is.
Yes, we of course already 2002. I said, which was at that time, quite a high figure. I said up to 50% of physical gold. I said then. Now, and of course that would have been a good investment. If you take in this century, the Dow is down 70% against gold. Nobody knows that. Everybody thinks that they made so much money in the stock market until the last couple of weeks. But the Dow is down 70% against gold in this century. Now, sure, people can say, well, you're just taking an artificial starting point. But nevertheless, gold has done very well in this century. And I told people, the people who listen to us, to have a big percentage. Now, I don't know where else to put the money. Stock market, I've been bearish about for a long time. I wouldn't have any money in the stock market. I think the stock market is going to go down at least as much as in 29.32, which is 90%. And I think probably more than 90%, probably 95 or whatever, go down to the 1,000 level where it was in the 1980s. I think, and of course, stock market against gold is going to go down even more so. So people who stay in the stock market and don't buy gold, they have an opportunity loss which is enormous. So people might not believe in the high percentage that I think you should hold, but at least, please hold enough as insurance against your other assets.
One of the things that people have been worrying about is how much they hold against. And you were telling me that you have people with $1 billion that vault gold with your facilities. Either you're in Switzerland, I think Singapore. Is that right? Singapore. Yeah, Singapore. Yeah. And you say I got people that have $1 billion in net worth, and they had half of it in gold, and they feel just fine about it.
Well, yes, we have some very wealthy people who believe in gold for the particular reason that we have discussed, and we're very fortunate to have actually for these investors the biggest private gold vault in the world in the Swiss Alps, which is a unique vault with and the safest vault in the world, and a real James Bond experience if you're inside there. So you've got to keep it safe. And I mean, as I said, our investors, they don't care about the short term. They don't care about the price of gold on a daily basis. They know that they need the insurance. So everybody won't believe in having 50% or more. But it doesn't matter. Have enough to at least so you can fall back on your gold if something happens. Now, people who don't have a lot of money, of course, everybody doesn't have a lot of money to invest in gold. But you can buy a gram a month. A gram is $50. So you can buy a gram a month. People in Venezuela had done that in 2000 before the crisis started. they would have lived happily for a very long time and had enough for food, etc. So you don't have to be wealthy to hold gold. You can buy gold in small amounts, or silver also. And instead of a couple of beers or a pack of cigarettes or whatever people buy, you just buy a little bit of gold, and put it away. It will help a lot of people, and more than help, it will save a lot of people in coming years, in my view.
And so this thing's going to go on, but this is going to be a one. People keep thinking this is going to be a one-time event, and it's just going to be, the basically the start of the end is clearly here, clearly. And you think it's going to take a couple of years to play out?
Well, I don't want to. I look more at, I'm a long-term investor, and somebody who looks at markets long-term. So I don't know. It could go a lot faster than we all expect. In 2932, the market crashed 90% in 3 years, 2.5 years. And the bubble is much bigger now, Greg. So it could go very, very fast. But let's say, 2 to 5 years. But be protected now. Don't wait. There's nothing to wait for. Don't wait to sell your stocks at a high level. They might bounce, but when they bounce, people are not going to sell there, and then they say, well, the market's going up again. So don't hold on to your stocks if you want to preserve your fortune. That's my view.
Egon von Greyerz, you have Matterhorn Asset Management. The website is goldswitzerland.com. Goldswitzerland.com. You write free stuff there. There's no membership. You can find out about vaulting gold if you're a big player. If not, there's a lot of information on there that you write. You're a fairly prolific writer, and you write very thoughtful things. And I got to tell you, I've had you on for a number of years. And I've always enjoyed having you on, and I've always thought, well, every year that we didn't get this big crash is another year you have to prepare to put yourself in a little better position, get yourself pay off that car, pay off this, get that fixed, you know what I'm saying? And sure enough, if anybody listened to you in the past and didn't ignore the risks, that's what you were talking about, ignoring the risks.
Yeah. And
you can't ignore them any longer, can you?
No, sadly. So we had now decades of uber optimism, uber speculation, and this is now changing. But I want to come back again because I don't want to leave the impression that I'm a prophet of gloom and doom. As you said, I'm just looking at the risk. The risk is now at a level I don't think the world can be saved. But there will be benefits of this, Greg. The benefits will be that normal values will come back instead of having the golden calf as something that you aspire to now. You will be back to moral and ethical values will come back. Family values will come back. And remember, if we get bad times, there are and as long as we have enough food and a roof above our heads, then there are so many free things in life. I'm looking out over a big mountain here. The nature is free. Walking in nature is wonderful and very good for the soul. Family and friends, just spending time with them, which has more or less disappeared now because everybody is just on their gadgets or watching TV so family values will come back. And there are your music and books. There's so many wonderful things in life. So don't think that just because we will have less money is the end of the world. This too shall pass. We will come down to a different level, and it'll be tough to transition. Nevertheless, the world will continue. So there's no reason not to be optimistic in the long term. And I think I would like to leave people with that thought, even if we're going to have quite a difficult period now for the world for a few years.
Egon von Greyerz, thank you so much for joining me today on USAWatchdog.com. You've been nailing this big picture for a while, and boy, the picture, it's not little spots here. Now all of a sudden, the picture's taking shape. The picture you were describing is taking shape, and now the risk, which is unknowable, is starting to be knowable. So thank you for joining us today, and thank you for all your other appearances. Thank you, Egon von Greyerz of Matterhorn Asset Management at goldswitzerland.com. Thanks for joining us.
Thank you, Greg. It's always a pleasure to talk to you, and thank you for what you're doing for people, understanding what's happening in the world, and they should listen to USA Watchdog, because there's so many good things coming out of your site and what you're doing, your interviews. Thank you.
Thank you, Egon, and with that, we'll sign off. Thanks again for joining us, Egon von Greyerz at goldswitzerland.com. Thank you very much.